Good morning, folks, and welcome back to Almus Market Mornings. For a change, we got a significant data point from the US economy. Yes, the inflation print was released despite a government shutdown because the CPI is used for the annual cost of living adjustment calculation. The print itself was lower than expected for the month of September, which gives markets a bit more confidence on the rate cut going into the FOMC week. The White House also said that there may not be a CPI report for October due to the government shutdown, as it wouldn't have been calculated. But it's not just the FOMC, but there is also the meetings by the ECB and the BOJ this week. Meanwhile, there has been some positive development on the US-China trade talks, with both negotiating teams having agreed on key disputes. It's now up to the leaders to strike up the final deal. Morning, JK, what's your take going into this week, major central bank meetings as well as this US-China trade talks? What do you make out going into the new week?
Morning, Swaraj. It's a lot of news from Asia to start the week with. Yes, top officials from US and China have actually ended their talk. I mean, first day of talks in Kuala Lumpur, last weekend, and they are describing them as quite constructive. And actually, they are trashing out a framework of a trade deal which the two leaders are to decide later this week when they meet on 30th. And significantly, Secretary Bessent has said that the talks on the sideline of the Asian summit has eliminated the threat of Trump's 100% tariff on Chinese imports starting number one. So these are the two things that we have to look at. One is the rare earth export controls by China, which has a huge implication for industries across the world and particularly US, of course, and the reciprocal or rather the retaliation by US by imposing 100% tariff on China. If there is a give and take on this, and that's going to be a huge development, positive development, and initial talks are have been on that direction, and hopefully the leaders also sign into a bilateral agreement which provides for critical minerals being exported from China and take back of high tariff from the US. So already we have seen major reaction in the markets, quite a lot of optimism there. Nikkei made a new thrust, in fact, first thrust above 50,000. And we are also seeing the Chinese yuan fixing has been below 7.09 today at 7.0881, and this was a level where the fixing was seen last 10 years ago. So that's another a big development which also will carry um, a lot of sorry, that was 1 year ago. And the Shanghai composite index has made a new 10-year high. So Asia has been buzzing. Apart from US China trade talks, there are also a framework of deals that many deals that US has signed on Trump's visit to the Asian region. These countries include Malaysia, Thailand, Cambodia, and Vietnam. Of course, we are still awaiting clear-cut indication on what is going to happen with the US and India trade deal. Meanwhile, of course, the market has been focused on a few other things. CPI data, as you mentioned, came softer than expected on most of the parameters, at least as per the headline numbers. Of course, details show that some components have definitely been dampened, while the upside has been seen mostly in the airfares, which was up 2.7%. But with oil prices remaining low, this is a matter of time before that also comes off. Now, importantly, what the market is trying to assess every CPI number is what is the impact of tariff. And the September customs review actually show no sign of acceleration. So it appears that the companies in US have been indulging in strong substitution through sources other than countries where there is a high tariff. So this in effect means that the consumers are not having to pay as high as it was feared to be. But of course, the countries which are other countries which are facing high tariff are continuing to suffer, no doubt. Apart from the CPI, we also had PMI surveys from major regions. Surveys in most of the major economies pointed to improving activity, particularly in the services, while manufacturing has shown mixed picture. Now, the other important event this week is obviously the Fed meeting. Fed meeting, last several meetings we have heard from Powell how they remain data dependent and there is no pre-commitment or a preset path for the rates. So now that is data is not available. We have only had the CPI number, which was an exception, and again that CPI number is not going to be available for October if the shutdown continues. So we key number that is on the employment is also missing. So now it will be interesting to see what kind of statements Powell will make, whether they would like to express more dovishness in view of the negative impact of the shutdown, or whether they want to keep saying that they will wait for solid data points before taking further approach. So that way, this Fed meeting is going to be very crucial, no doubt. And of course, markets not unexpectedly, the risk sentiment has improved, and but that has also pushed the yields up. So the 10-year yield now again above 4% for US, even in Asian market. Apart from the risk on news, or at least the expectation of risk on news, the huge amount of issuances in short-term bills and 2 to 5 year notes amounting to around 300 billion is lined up in the next couple of days. So I think that's also keeping the yields well supported. Uh, on indices, all the three key indices in US recorded new high on Friday. This actually more on optimism on the trade deal and also upbeat reports of earnings from companies. Shutdown has been totally ignored. Data from Refinitiv shows that 87% of the companies have beaten the earnings expectations on and 83% have actually on revenue. Now this week again it's a mega week for earnings because we have big ticket earnings from Microsoft, Google, Amazon, Meta, and also Boeing. Now on to India. Rupee showed some signs of further strength, but then the demand has been quite strong at the lower level. We are still not going towards the 8750 level in the absence of clear-cut indication about trade deal. Of course, one of the officials did say that we are very close to the first tranche of the bilateral trade agreement, with the broad convergence reached on most of the issues, and adding that they have begun drafting the the legal language of the draft. But then market now, after seeing a exuberant moves last week and then retracing whole of it, particularly in the stocks, wants to be a bit cautious. So I think we are still awaiting more solid news in this regard. Of course, in India also saw some PMI data which was somewhat subdued. Moderation in manufacturing and services activity, both were seen. It's one significant thing, India's reserves went above 700 billion in the week ending 17th. Some drop in the foreign currency reserve values due to obviously RBI offering dollars above 8880, and then also some for rather the rise in the dollar index, which means euro and other currencies were actually down for the week in review. But the significant point I'm trying to make is that the share of gold in India's total reserves has more than doubled to 13.6% from June to 2022. So India is also in the that front line of central banks who have been accumulating gold reserves in a big way. And we have already shared in the previous updates that overall the global central banks holdings of gold reserves have actually surpassed their holdings in US treasuries. So this is another important indication on how the gold is being preferred by the central banks. So we are starting the week with a lot of news ahead. optimism is there very much in the air, because it's very critical for both the US and China to thrash out a deal, or at least not to worsen the conditions. And of course, for India, we still await the trade deals. Yeah, I think Fed meeting and BOJ meetings are also on the radar. Thank you.
Thank you, JK. And of course, this week we are going into the Fed week. Fed has been of the commentary that they are following a data-driven approach, but the data itself is now missing. So how they view all of this situation will be closely watched. US equities recorded new highs on Fridays. Earnings are strong. And overall, even starting this week and towards the end of last week, there was a lot of positivity around the trade talks, especially how the US China pans out. We are having one set of positive update now, but of course, towards the end, it all goes down to the leaders how much they accept all these deals. For India, rupee appreciation has been capped. We are having a lot of dollar demand. Even we are sort of looking forward to the trade deal with the US. It's something we are watching out for. I think I will just end the podcast with that famous saying, "It ain't over till the fat lady sings." I mean, we are, as
Good
we
one, good
go
one.
to,
Yeah.
we are just going to the conclusion, but we have seen in the past also how things turn around in a very short span of time. So, yeah, that's it from us today. Thank you for listening. We'll catch up tomorrow with a fresh round of updates.